Hello everyone, and a very warm welcome to this ICAST webinar, the latest developments and changes to VAT. For those of you who don't know me, my name is Chris Campbell, and I'm Head of Tax for Tax Practice and Owner-Managed Business Taxes here at ICAST, and I have the pleasure of being your webinar host today. Our event this morning will last approximately 1 hour, where we will cover the latest developments in the world of VAT, whether it's about getting the basics right, or the changes to the VAT treatment of private school fees. There's certainly lots to talk about. VAT affects us all in our daily lives, and that's not just about whether or not we buy Jaffa cakes. It's also an area that we regularly receive queries from our members through the ICAST Technical Help Desk. To explain and help us understand more about the key VAT developments which could impact you and your clients, I'm delighted to be joined once again by Tony Cochrane. Tony is an Associate Director for VETA, the largest independent VAT and indirect tax team in Scotland and one of the largest teams in the UK. Tony has been a VAT specialist for 19 years, having started his career at HM Revenue and Customs before moving into practice, and he has experience in national and Big Four firms. A chartered tax advisor, Tony supports both private and public sector clients in Scotland and further afield, and he is also a member of the ICAST Indirect Taxes Committee. Tony will be a familiar face to many of you as he's presented at our VAT webinars in previous years, and it's great to be hosting him again, and I'm pleased to be welcoming him onto our webinar today. Before we begin, just a few housekeeping matters to remind you of. At the start of the webinar, you will have noticed our standard disclaimer. The webinar provides general commentary on the topic under discussion, and we expect our members to use their professional judgment and seek further advice as appropriate. You can submit questions at any time through the Q&A facility, which can be accessed at the top of your screen. Questions can be submitted anonymously if you wish. You can submit questions at any time, and please also join the conversation today through the chat box, which can also be accessed at the top of your screen. This allows you to comment or discuss with fellow attendees on matters covered by this webinar. We are, of course, also recording this webinar and will make it available for on-demand viewing afterwards in case you want to refer back to it or to share it with others. The slides will be available after the event by emailing our events team at events@icast.com. We look forward to receiving your questions throughout the webinar, and of course we'll try to get to as many of those as we can at the end. But without further ado, I know, Tony, you've got lots to cover this morning. Welcome, and it's great that you're joining us. Over to you.
Thanks very much, Chris, for the warm welcome. And hi, everyone. I'm looking forward to chatting with you over the next hour or so. Just to give you a real whirlwind tour of some VAT developments since we last spoke. There's been a lot happening. So today we're going to cover off just a very quick VAT overview. Then I'm going to discuss some HMRC updates. We're then going to kick into some case law that's fairly recent and important. And there's a nice spread of that, just that will affect either yourself if you're in industry perhaps, or your clients. Hopefully it'll be something of interest to everyone. I'll then quickly cover off some other points such as digital developments, legislation changes, CBAM, and then if we've got some time, we'll do some Q&A at the end. So without any further ado, let's just get quite quickly into the VAT overview. It's important to remember that VAT is very important for the UK government and Treasury. It makes a massive contribution, and in the last detailed figures we had, this accounted for 170 billion of Treasury income, so to speak, that could be used for public investments. So it can be quite easy to forget about, the importance of that to the wider economy and public sector and services. It really does play a massive part. And that's why HMRC and the Treasury like to focus on it to make sure people are getting things right at the right time. Now, in terms of, some of the VAT basics, it's worth remembering amongst us all. I think it's important to just have a basic feel for, well, when do I need to worry about VAT registration? When does that matter for my business or my client's business? And the quick answer to that is on the screen just now. The current VAT registration threshold is £90,000, and the current deregistration threshold is £88,000. Now, when we were last discussing a general VAT update, It was about a year ago, and we didn't know what was going to happen next with VAT and the registration thresholds. If you joined us then, you might remember there was a lot of chat about, oh, could the threshold significantly reduce? Could they increase? And what we found in the end was they're going to increase by £5,000 each. So there is an increase there for both, but not a massive change. Because I remember at the time, hold my hands up saying, I think there's a good chance it could significantly reduce, to bring more people into the VAT net. That hasn't happened yet. The caveat is, of course, Labour are now the government, and they've said we're not going to tinker with these registration thresholds for not just VAT, but various other things as well. So I suppose it's keep an eye on this space. But for now, if you've got a business that's trading away, it's the 90,000 magic number they need to worry about to become VAT registered. That's either over the last 12 months or in a single month itself. It's nothing to do with calendar years. It's nothing to do with accounts. It's just about alive, what's happened in the last 12 months or what's happened in 1 month only. So it's worth just keeping those in mind as you have client conversations. It could well be that a client could deregister as well. It's good to know what that threshold looks like. Discussions continue on this stuff, but as I said a moment ago, I'm just not convinced that something will happen quickly. You'll be able to laugh in my face if something does happen quickly after this session, but I think we're probably going to see the same threshold for a little bit for various political and legal reasons. Is it possible to increase the VAT threshold significantly, etc., even if government wanted to? It's not straightforward. Even the change to the thresholds, I understand, can take several months to get agreed, etc. On to some recent HMRC updates. I've selected a bit of a random selection sample because I think everyone that's joined today will have some acute interest in this stuff, or you can compare it to a similar situation, or indeed it's just stuff that we're seeing quite a lot of in the press, etc. So in this section, we're going to cover off private school fees. You might have heard about that change. But there's also other stuff we'll cover off, such as charities, private equity, and cladding remediation works. But their main focus will probably be on the private school fees and charity angles. So private school fees, what happened? Well, historically, the fees for education and boarding services provided by a private school in the UK were VAT exempt. What did that mean? It meant there was no VAT to be accounted for in income, and in turn, there wasn't the ability to recover the VAT incurred on expenditure. Private schools, broadly speaking, seemed happy with this arrangement. From the 1st of January 2025, the VAT position has changed. This income is now subject to 20% standard rate VAT. What does that mean? It means that private schools have got to account for 20% VAT on their income, and it opens the door to VAT recovery in principle. Just to be clear about this change, what does it mean for the schools? Just very quickly before I move on to the next slides, it means they've got to make a decision. Do we increase our fees to reflect the VAT we now need to account for to HMRC? Do we take the VAT from our fees by applying the VAT fraction and that hits the bottom line? Or is a little bit of a blend there? We'll fund some of it, but we expect parents to fund the rest. So there'll be a partial VAT increase, fee increase to reflect some of the VAT cost, but we're not going to add on the full 20%. That said, I am aware of some schools that have done that. Those schools were down south, especially. So, why did this happen at all? Well, the exemption was removed to raise revenue for public finances. That's what Labour said they wanted to do. They want to help state schools' education, essentially. So they want everyone to ensure they have a better quality of education, no matter if it's in a state school or if it's private. They want everyone to fulfil their potential, and they want to be backing that and making that possible. It's a way of Labour showing we're really committed to this, and here's what we're going to do to put this into effect. We're going to enact the changes we want to make by increasing the VAT take on private school fees and reinvesting it into, the wider education pool. In principle, that sounds fair enough. Whether that can happen in practice or there's such a windfall, from charging VAT on these fees that makes it possible to achieve all these great things is still to be seen, I suppose. But that's the principle. That's why it happened. And, the government's stance says, well, do you know what? 94% of kids attend state schools. We want to make sure it's improving for that population. So I can understand in principle, I'm sure everyone on this webinar can understand why it was happening. It happened very quickly. There was a lot of murmurs that Labour were keen to do this if elected. And of course, Labour did win at the general election. So then they were in a position that they could do this. So normally, it's worth commenting that to have any VAT change at all, it's normally a slow process. There's usually a lot of campaigning, for example, out with government and Treasury, etc. And then once it gets on those desks, it can take a long time to put through. A lot of very clever people have got to think about this stuff and work out, should we do it, can we do it, when will we do it, etc., etc. A lot of things need to be written up, like guidance and legislation tweaks, etc. So it's not an easy process, and in my experience, and I'm sure Chris would back me up on this, things move relatively slowly, when it comes to VAT changes and generally tax changes. However, this happened so quickly. Although we did know that this was on Labour's mind, the general election result was formally declared on the 5th of July 2024. Labour formally confirmed this was happening on the 29th of July. So on one hand, you might say, well, maybe everyone had their ducks in a row. I'm sure that was a possibility. Someone might have, but to make the change announced formally so quickly, it was quite surprising for me personally anyway. I'm not saying I didn't expect it to happen. I'm just a bit surprised at how quickly it happened. So what's the impact? Well, I've already covered this off a little bit. Private schools must now account for 20% standard rate VAT on their fees income. And again, when you're talking about VAT accounting, there's two parts to that. Number one is a bit like professional services. What I do, if I'm raising an invoice to someone for, let's just say, £1,000, I'll typically add that on at 20%. So the invoice then looks like £1,000 plus £200 of output tax. However, if I walk into a shop to buy a computer game or a DVD or a jumper, I see the price and the retailer typically accounts for the VAT from that price. So what would happen is if something costs 12 quid, the retailer will divide that by 6 to work out what the VAT is. They're not adding it on, at least presentation-wise, for the customer. Private schools find themselves in a position, as I've said, where some are doing all or a little bit in between. And it's really down to the schools how they do it. HMRC don't mind. They'll be as loose-lipped as saying, we don't care, so long as we can see that output tax is being accounted for, you can do it how you wish. So that's the new position, and it's a very big change for private schools having to account for output tax on income. For anyone that's supplying consumers who cannot recover VAT, it does create that real problem of how far can we go with increasing our prices to reflect this VAT charge? It caused major headaches for private schools all over Scotland and, of course, the rest of the UK. So we've got this major change. Historically, VAT wasn't payable to HMRC on this income. That's changed, and it's up to schools to decide how they went about it. And of course, some of the schools might have went to yourselves to seek your thoughts and views on, well, what does this look like? How can we model this impact? What are the options before we decide here's the approach we're going to take? And I would suspect that, that will continue, that type of communication. I know that I certainly continue to have discussions with private schools or their advisors about this, just to say, well, what's the latest with it? But also on a more acute level, here's how this looks for this school. So that's an important question, schools had. If we have to do this, how does it look? Do we absorb it all? Can we pass it all on? Is there a bit of a medley in order to, deal with this VAT burden? So what's the impact, for, parents? Well, they're now probably, in most cases, paying higher fees. That's the headline news. You can call it what you want about how the school works out how much it wishes to charge. Ultimately, the parents are facing higher costs, is what we're seeing. And when that happens and there's VAT involved, that means that the Treasury have more VAT income going into their till, their cash register, and that's what funds, in principle, the state education school system. And that's the plan. Again, whether that happens, whether we can see a clear correlation, not yet in my experience. Will we see it in the future? I'd like to think we will see some, clarity on here's the money that's coming in and here's where the money's going out to. It also means that, the private schools have got less money to play with because, in my experience, most have decided to absorb at least some of the VAT burden. So historically, they'd have said, well, we've got, X income, that's ours to fund the staff, the grounds, the goods, the services that we buy in to provide this education to our pupils. Now we've got less of that. Where do we, sharpen our pencil in order to deal with this? That's the dilemma that the schools have got. So for the customer, the parents, the pupils, they're paying more. Not a great message for them, not a great feel for them. For the school, equally, they're thinking, well, we've got less to play with as well. It's not like we're just passing it all on to you, at least in most cases. And I suppose the final point on that is it has opened the door to VAT recovery for the schools. But you know what? It's complex. It's not as straightforward as you'd like to think. It's not like, oh well, we're getting a great benefit here. This makes it worthwhile. I think on balance, most schools would say would much rather it continue to be VAT exempt, and we don't need to account for VAT on our income, and except we don't recover much of the VAT, if any, on our expenditure. I think that would be the preference to we do the VAT accounting for outputs and we get some or all of our VAT back. People liked it how it was and they're quite against the change. Where are we at just now? Well, schools are registered for VAT. They are VAT registered and they've got to get used to what comes with VAT registration, doing VAT returns, complying with making tax digital, general housekeeping and admin that needs to be done to take care of the outputs and inputs. Can we do claims for, expenditure on, property where the door was shut before? How much do we get back? Whether it's good, bad, or indifferent, there's a lot of housekeeping now required by schools. And indeed, a lot of them may have got your advice or outsourced some of these, obligations to you if you work as an external accountant to them. But again, it's not a happy feeling. It's not a good place. Unhappiness continues to linger in this sector. And the government is facing legal challenges on the change. In fact, in about a month's time, less than that, there will be a High Court session about this stuff. So there is still a watch this space mandate. Things could change, but as it stands right now, where are we? Schools are certainly in a position where they've got to get on with it for the time being at least and deal with the imposition of VAT on their main revenue source. And as this happens, that creates the need for your support, either if you work in-house at a private school or you're their advisor or accountant. It's something that they will want and appreciate your support with. Moving on to charities. Smaller charities in fairness, have been targeted by HMRC in terms of a campaign to work out their VAT recovery status. The headline news here is that HMRC feel that there needs to be a focus on business, non-business calculations because they feel that some charities are claiming too much VAT or at least not getting VAT accurate. But I suspect the main concern is there's not enough VAT restriction happening to reflect non-business activities. A typical charity will undertake non-business activities. When I say that, for VAT purposes, that means they're doing stuff that's free of charge. It's funded by grants and donations typically. And what it means is you don't account for VAT on your non-business activity, but it also means you can't recover the VAT you incur on expenditure, albeit there are some VAT reliefs available to charities. There's a zero rating for advertising. Some construction works might not be liable to 20% VAT if you're a charity. depending on what you're using the property for. But the headline news is there's got to typically be a VAT restriction, either fully because you're not VAT registered and can't be VAT registered. If all you do is non-business activities, you can't register for VAT, and in turn, you can't recover any VAT you incur. But if you also undertake business activities which are commercial in nature, i.e., you're providing a good or service in return for consideration, a payment, and then you might be VAT registered, and you might have some very complicated VAT calculations to work out your VAT recovery, or at least you should have those. And that's where, some of you who've got experience working with charities in-house, or you're advising charities and helping them out with their obligations, be aware of this. HMRC want to make sure people are doing our business, non-business stuff. So business activities, as I've said, are commercial for a payment and they will be taxable or exempt. Taxable activities allow the VAT registration or maybe even mandate it. The 90,000 threshold I mentioned earlier, you need to keep an eye on if the taxable stuff hits that window. And you also need to think, well, that also equates to VAT recovery if the charity was VAT registered. HMRC have identified these weaknesses in this third sector, and they're starting off by looking at smaller charities that might have overclaimed VAT. Charities might be oblivious to this point. They've got so many things to worry about, but they have got a duty to look at VAT and taxes, and it is important that charities, do know what their obligations are and what they should be doing, be it registering for VAT or not, and if you're registered, what VAT can we get back? So HMRC are trying to educate the sector, starting off with the smaller charities. What should the charities do? Well, they should consider their position. Have we got a VAT recovery calculation if we're VAT registered? No, we just recover all the VAT. That would indicate there's a problem. Or if they've got a calculation to recover VAT, but they're not really confident in it, or it's outdated, it doesn't reflect everything that's going on, or it might be right, but no one's checked it properly in ages. We're just doing what the last person did and they're doing what the person before them did. It's worth just verifying with charities, what is it like for you when it comes to VAT? Are you registered? Yes. If you're registered, what does your VAT recovery look like? And if you're not VAT registered, should I be? It's worthwhile sometimes just getting an independent view from VAT specialists if you've not got a great deal of confidence or experience with this, because it can get very complex doing business, non-business calculations. And if you've got a mixture of taxable and exempt business activity, doing partial exemption as well. This is very complex. It's worth just getting a second opinion or some support if needed, be it as a charity or even as an accountant that's, advising and engaged by charities. And of course, if you identify errors, be it someone should be VAT registered, be proactive and register. If you identify there's too much VAT recovery or too little, take steps to correct that position. Now, what's next? I suspect that HMRC might then look at, other charities. They've started at this pool, this population of 2 million of turnover or less. I suspect they may start going after other charities that are larger. And I suspect they will find similar errors just on a bigger scale in terms of, well, the VAT that's been overclaimed is bigger, or the VAT that's not been declared is bigger, etc., etc. The real issue here is even if you can get round the VAT position, so HMRC assess and say, here's the VAT that your due is, even if you could get some of that back from customers, you might not get it all back. Bear in mind, a lot of customers will be individuals. Mostly they will be, I would suspect, especially the smaller charities. So you've got VAT assessments to worry about, but if we put that to the side, HMRC are very active with penalties and interest charges, and I suspect as time goes on, HMRC might be less generous with suspending penalties, for example. When they do that or just don't penalise at all, it means that there's less money going into HMRC and in turn Treasury. I suspect HMRC's treasurers to work out where can we get more revenue, and an easy one would be to look at, well, why are we suspending penalties so easily? I think that's a big one to keep an eye on in the future. But take action, to minimise the risk of these things happening. They'll go to you for support if you're external. Internally, it might be speaking to other stakeholders and trustees. Just to say, let's kick the tires if we're not convinced we've done a job on this recently. And the larger charities, again, I just think they're on the hook potentially for being a future target of HMRC's education piece. So watch this space. If you think there's a potential issue for any charities you know of, do get in touch with them. I'm going to very quickly cover off the next few things. Number one is private equity. Similar to charities, there's been a one-to-many campaign. Very similar, that the whole idea is that HMRC are encouraging people to check their procedures and processes, make sure they're robust, because HMRC just has some concerns that the PE businesses aren't recovering VAT correctly, or there's potentially some gaps or weaknesses in the process. HMRC wants, comfort that people are doing a good job with this. So they've issued the letters as an educational piece, and they want the guidance that they've pulled together followed. They want to have comfort that at least we've told PE businesses to look at it, but also they will no doubt check, what is your environment looking like? Have you done what we've asked of you? So, if you identify something that's wrong, make the change before HMRC chap on your door. As I've said very quickly, the idea, broadly speaking, is this is about VAT recovery. Is there too much VAT recovery? Are you attributing your VAT to the right places? Are you using the reverse charge mechanism when you've got to, buy in a service and report the VAT on your VAT return? How does that look like? What's the place of supply of services provided? Essentially, where is the VAT accountable? And also, if you identify weaknesses and in turn errors, make sure you make the changes, make sure you make an adjustment on a VAT return, albeit there's a small cap there. So it might well be you need to put in a disclosure to HMRC to sort this out. Next steps, I think for PE, they need to keep an eye on things and make the changes and, follow HMRC's instructions pretty much. But the reason I'm mentioning this really is that I think HMRC might have more one-to-many campaigns. We're seeing a theme already with charities and private equity. Are you getting your VAT accounting correct? Think about your clients that do things that are exempt or non-business. I suspect HMRC might target more in the future with more one-to-many campaigns. So that's the reason for mentioning the PE one. The next one I'm going to cover off is the cladding remediation works. A big important social aspect to this as well since the Grenfell tragedy. And HMRC eventually published guidance at the tail end of last year. It was actually a few days before Christmas. In December 24, HMRC issued guidance. On one hand, it's good news that there's now some guidance from HMRC about this because it was long awaited. On the other hand, I think the guidance could be clearer and be more prescriptive on here's exactly a scenario where someone could benefit from claiming VAT or zero rating an output. So again, I think we need to keep a watching eye on this. We need to keep an eye on this space, because I think HMRC will probably find there's a lot of pressure to clarify the guidance that they have put out there. The next part I'm going to do a whistle-stop tour on is some case law updates, and we've got some really interesting cases actually. I'll just quickly spin through each one just to give you a bit of a flavour about what's been happening out there in the courts, and it will just help inform you, or perhaps even your clients. In turn, if you've got clients that do similar things or identical things, of course, to what was happening in these cases. So, I'll just get straight into them. We're going to cover off Yorkshire Agricultural Society. That was about, whether a fundraising event was tax board exempt. Global by Nature was about, is this a food product that's zero rated rather than a standard rated product? Sonder Europe was around, is something subject to tour operator margin scheme VAT accounting rather than normal VAT accounting? Hotel with Tours about, can you claim the VAT incurred on share sales? Typically, historically, you couldn't, but they've had some success, so we'll look at that in a moment. Go City was about, VAT accounting, but for me, some important aspects of that were around how HMRC approached the case and issued assessments. And finally, I'm going to cover off very quickly just some recent developments in the medical and cosmetic procedures space. There's been a lot of cases around this, hence we're just going to look at the general environment there. So first off is Yorkshire Agricultural Society. In a nutshell, they've been successful. They argued that their fundraising event was exempt, and HMRC took an alternative view. HMRC took the view that the income should be standard rated. So if we just pause there for a moment, very important point for both the Yorkshire Society and HMRC. Yorkshire Society have got the income and they're thinking, well, this is great. We can use this income for our, obligations and aims and objectives that are charitable. Conversely, HMRC were simply saying, well, that's all well and good, but we think that's standard rated. So we're going to take a chunk of that from you. So that means there's less money for the charity to use for their objectives. In this case, the charity was, successful. They were successful at court, and that means that they get to preserve the exempt treatment, which is great news for them. It would have been, I don't want to say catastrophic, I don't advise Yorkshire, but let's say it would have been very important for this to be successful for them, because although this would have applied to them and they'd have had to have found a way of funding the VAT from that income, I highly doubt they'd have been able to go out there and recoup the VAT from other parties. This would have just been a real hit where you've got to account for VAT from that fundraising income. It's not a good optic or feeling or news story internally, I would imagine, to think this is happening, putting this much effort and work into this event, and now we're finding that we've got it wrong and treating it as exempt, and we've now got to pay over quite a significant chunk over to the tax authority as output tax. For now, they'll be delighted that they've been successful, because it means that they can, continue to, say, well, that money's still in the bank. We don't need to pay VAT over to HMRC from it, but it'll also give them the confidence that going forward, the same applies. So acutely, Yorkshire Agricultural Society will probably be feeling in a fairly comfortable spot right now. I think the big takeaway from this case is that all charities out there, that especially when it comes to doing fundraising events, should be mindful of, well, should I just assume I've got an exempt activity because that's what I've always done, or should I just look at this in a bit more detail to make sure I'm ticking the boxes to make this VAT exempt? Because this case shows that HMRC are challenging charities about the VAT treatment of these events, and I'm sure the last thing that any of those would want is for HMRC to come along and say, you've got it wrong for the following reasons, so we're going to assess you for VAT for the last 4 years potentially in these types of events. So that's a big chunk of money, but also the headache of, well, that means we've got to defend our position and potentially end up in a similar situation to Yorkshire and go to the tribunal, for example. It's one of these things where you're always better off to be proactive and kick the tires yourself. If you're working in a charity, that might mean you're literally the person that does that. However, if you're an external accountant, it might well be that you think, well, wait a minute, I've got a few charity clients. I know that they're treating some of this stuff as exempt. It's worth just having that discussion with them to make sure that that seems appropriate still, because the risk is HMRC come along and say, well, you're not on all fours with Yorkshire, who were successful at court, you're a bit different, or you're just simply nowhere near ticking the exemption boxes. As such, here's your VAT bill, plus penalties and interest. It would be good to have that chat, either internally or with your clients, just to make sure they are comfortable with their position. And the next one I'm going to look at is Global by Nature. You can never have a VAT webinar without some food chat. So Global by Nature were also successful at the first tier recently. Their situation was that they were providing a product called Super Warrior, and they were zero rating that product, essentially, or they wanted to be zero rated. I think in reality they'd maybe standard rated it initially, then put in a claim, etc., etc. HMRC's stance was, no, this is a standard rated sports drink and it's marketed as such. As such, standard rate VAT applies. So Groundhog Day chat here, but we've got this dilemma if you're the business. We think that something should have no VAT, so all our income is ours for VAT purposes. However, HMRC want their chunk of change from it as VAT output tax. And if successful, what does that look like? Think back to the private school chat. do we take on and absorb all the VAT costs in our selling price? Do we add on VAT at the full 20%, or do we do a little bit of a mixture, a blend where we'll up the price a little bit and we'll have to absorb some of it? As you'd imagine, GBN were all over, we want this to be zero rated, and they've had their day in court. It's an interesting case for VAT geeks like myself, but you might be interested too if you look at the finer detail. It comes back to real basics, such as, HMRC's argument was, well, it was a sports drink. It isn't, quite literally, it's not. When the customer's buying this, it's not a sports drink. So the first tier tribunal were all over that point. And it was also important to note this was about, the carbohydrate content. Ignore the marketing bit. You can call something whatever you want. You can, label it however you want. The proof is in the pudding about what is this product. And similar to other cases where it might be what's the VAT liability of Pringles, well, what's the potato content of crisps or chips or vegetable products? That's what the court was looking at here. Like, what's the ingredients of this product? What is it we're actually looking at here, and what is it not? And by discounting that it's not a sports drink, it was able to then say, well, not a sports drink, the carbohydrate level is this, we're happy with what the business is saying, and this should be a zero rated product. So the key takeaway here is food and drink products continue to take up a lot of courtroom time. Would it be easier if the government changed the VAT rules overall for food and drink and had a new version of Schedule 8 and said, here's what the rules are now? Of course it would, but there's no sign of that significant VAT legislation change happening or HMRC updating their guidance significantly. As such, we continue to have these court cases around what's the VAT liability of food and drink, 0 or 20% VAT, which is it? It's important if you've got clients or you work internally in a food or drink environment to do a product review if you've not done one recently, and just make sure we're comfortable that we're capturing all the recent cases and we're comfortable that we've got sufficient outsource support if need be, get another, view from an external VAT advisor perhaps to say, yeah, we've done a review of your product range and we are satisfied that, your current treatment is accurate. So yeah, we'll probably continue to talk about food and drink in the future until there's a massive change of legislation, I suspect. Sonder Europe is an interesting case. It's fairly recent. They were unsuccessful at a recent upper tier tribunal. Just a quick reminder, if you disagree with HMRC or HMRC disagree with you, you might find yourself in the tribunal system, and the first step normally is a first tier hearing. Once that decision is made, the losing party might say, well, I'm not happy with that for whatever reason. We're going to go to a higher court, which is the upper tier. This is where we're at with Sonder. They've had their upper tier and they've been unsuccessful. In a nutshell, Sonder were saying we shouldn't have to worry about, VAT accounting. We are getting it right, because the first tier tribunal, they said that the income should be taxed by TOMS, and that's what it is. That's the first tier's decision. As a general comment, the first tier judge might not be a VAT specialist. It could be not anyone, but just it might not be someone that's fully up to speed with VAT. So there might now and again be the iffy decision. So it then goes to the upper tier and they might disagree with the lower court. So in this case, upper tier said, nah, we don't agree with the FTT. What we think is you've got actually a material alteration in what you're doing. Essentially, Sonder was buying in, let's call it flats for ease. So they're renting flats for 5-10 years, whatever it looks like. But then they're selling on the short-term holiday lets. To use a spurious phrase, these days we'd all know what Airbnb means. You might rent a flat in a city centre for 2 days if you're in town celebrating a birthday or going to the theatre or whatever. The upper tier felt like there's a real material change here from what you've bought in, the flats rental, to what you're providing your customers, short-term holiday lets, I would paraphrase it as. Now, why was this important? The TOMS, the Tour Operator Margin Scheme VAT accounting, results in lower VAT payable to HMRC. You're essentially accounting for VAT on your margin. Now, for this business, when they were renting the flats and stuff, their inputs were largely VAT exempt. There's no VAT to recover. So what that meant was happy days. If we've only got to account for VAT on a margin, we're in a good spot here. However, if we're not accounting for that in a margin, you're accounting for output tax on your total supply with very little input tax to deduct from it. So this means that, Sonder had an impact on their bottom line. They had a larger VAT liability if they had to do, let's call it normal VAT accounting rather than TOMS. Just very quickly, TOMS is complex. It's a bit of a nightmare, even for VAT advisors, or at least this one here. But it's a complex thing, and especially with cases like Sonder and also other cases like we've had Uber and Bolt and all sorts of cases out there that are still live in some cases. It's important to seek that advice if you're in this space from a specialist. All joking aside, we've probably got the knowledge and experience more than people that haven't dabbled with this as much before or haven't got as much experience. So it's important to really make sure what we've got seems right. And if it's not right, what's the risk? Is it that we're maybe doing ourselves out of money here? Or is it we're not giving enough money to HMRC as VAT? But it's important to do two things: make sure you're comfortable or your clients are comfortable, and also make sure you speak to someone, an VAT advisor, if you feel, yeah, that would be a worthwhile conversation. Hotel Latour, in a nutshell, the normal rule for VAT is you recover VAT if it relates to a taxable supply. Hotel Latour incurs input tax, the VAT on their purchase of professional service fees. And what that related to was a share sale, which was exempt from VAT. So using accepted normal logic, they wouldn't be able to recover the VAT they incurred. But what they managed to do was convince the first tier tribunal and the upper tier that they were in fact allowed to recover the VAT incurred on the professional services fees that related to an exempt share sale. The reason for that, in very plain terms, not technical language, was forget about the exempt share sale. We only sold the shares to fund something else that would be taxable. So we've sold the shares in this company that basically, let's call it a Birmingham hotel that was underperforming or whatnot. And what we're going to do is, once we've got the money from the share sale, we're going to really back a hotel in Milton Keynes that we think can make brilliant amounts of money. Please forgive me if I'm getting the cities mixed up, but the principle's there. Forget about the exempt share sale. Look at the bigger picture. Look at what we're doing this for. And they had their day in court twice with the first tier and the upper tier. However, HMRC took it to the Court of Appeal, and the Court of Appeal disagreed with the previous courts and said, no, this is non-recoverable VAT. You shouldn't be recovering such VAT. Now, the Supreme Court will be considering this fairly soon. I think it's about 3 months' time. Yeah, it's June 2025. They're going to have a look at it. It might change again, which would be great for the taxpayer and people with a similar profile, i.e., I want to recover the VAT I incur on exempt share sales. Or indeed, the Supreme Court might underline what the Court of Appeal have said, which is a bad news story for such businesses that want to recover this VAT or have and might need to repay it to HMRC if it's not already been paid back. The key takeaway here for this one is it's important for your clients, or if you're in-house, just to think about this VAT before recovering it. In the M&A space and the transaction space, before I just assume that this VAT's recoverable fully, not at all, or partially as residual input tax, just have a proper think about what does current case law in HMRC look like, and get an advisor's view if you think, well, there's a lot at stake here, don't want to potentially end up with, egg in our face having a VAT assessment and the penalties and interest that go with that. Go City is one I want to quickly look at. Not for the actual matter of the case. That was essentially around, is our income outside the scope of that? But I'm not going to go into the technical bit. The bit that was interesting for me in this case was actually the tribunal's views of HMRC's behaviours. And essentially what happened was HMRC weren't sure that the business was getting the VAT accounting right. And they said, we're going to need to look into this. And in the process of doing that, they said, we're going to issue what they would call a protective assessment in this case. So we're worried about that going out of time for us to get it back from you, business. So what we're going to do, Go City, is issue a protective assessment for the oldest periods, just to make sure if it ends up that you shouldn't have recovered the VAT or you should have accounted for output tax, but etc., a protective assessment will be in place in order that, HMRC isn't out of pocket. We don't lose that VAT at stake. So that's the principle. HMRC trying to protect themselves. The problem was that the tribunal said, well, look, you shouldn't really be issuing assessments when you're still not sure if it's right or wrong. Once you're sure it's right or wrong, fire away and issue assessments. You can even issue protective assessments in long drawn out, cases. Rank would spring to mind. But ultimately, you can't just call something a protective assessment if you're mulling over something. You've got to have made your decision and issued that to the business. Then you issue the paperwork. You don't issue the paperwork asking for money, even if you tell them not to pay it just yet while you're mulling it over, and then say to them later, oh, we're due that money, or forget about it. I think that's an important point, because I think it's human nature to assume that the tax authority are right when they issue paperwork such as VAT assessments. That's not always the case. If you work in-house, look at it properly and read through it if you're comfortable with that. If not, speak to the external accountants. That might be you guys in this situation. And also, if you're not comfortable with it, speak to a VAT advisor. We know for our sins the real detail behind the law of when can HMRC issue an assessment and when shouldn't they. So, that's important, basically. Don't take it for given HMRC assessments are correct. Test it out, read it to make sure before you accept it and pay. And that's what happened in this case. The court found the HMRC had been, let's say, a little bit overzealous in their approach in this case. Just very quickly, medical versus cosmetic procedures. In a nutshell, businesses that are doing procedures want their income to be VAT exempt. HMRC say it doesn't meet the criteria to be VAT exempt. In turn, standard rate VAT is due. Please pay us the VAT that's due to us. There's been many cases over whether some treatment is exempt or standard rated. Businesses pushing for the exemption, HMRC pushing for taxable, and on balance, most of the time so far, HMRC have been successful. If you've got clients in this space, it's important to find out what is it you're doing with that. If they're saying, oh, well, I'm treating it all as exempt, you might want to just double check that is a comfortable position, because HMRC are all over this and typically speaking have been successful. Now, that's not to say that all treatments should be standard rated. It's just to check and make sure if you're treating as exempt, have you got something to rely upon based on the law, HMRC guidance, and what all these cases are looking like. Moving on very quickly, this will just take a few seconds really. Digital developments, we're seeing, consultation, which is now open on, the HMRC and the Department of Business and Trade's e-invoicing status. They're wanting to get views from people that are going to be affected by this. They want to see increased enthusiasm and adoption in the UK. And this is a real opportunity to share any views you've got on what that looks like, be it as a supplier or a customer, or both indeed, in some cases out there. So it's one that you might have a strong feeling about, and you can get involved up until the 7th of May. Or indeed, you might want to mention to your clients if they seem to have a real interest in this stuff. I think it is going to be really interesting to some people, but you've got to use that individual feel for, does this really matter to X, Y, or Z? Legislative changes, we've had one recently, and from the 1st of January, live streaming services for consumers flipped from being a place of supply of where the supplier belonged, i.e. where VAT is accounted is where the supplier is based, over to where the customer is located. And I think there's just a little bit of a risk here to keep an eye on, that you don't have an obligation to account for foreign VAT, and you're also accounting for UK VAT when you shouldn't be. So, it's worth discussing with any clients you've got that are providing B2C, so their customers are consumers, live streaming services. And just on this point here on this slide, UK CBAM is coming about. What is CBAM? It's the Carbon Border Adjustment Mechanism. UK CBAM is expected to be introduced in 2027, but it's important to start to get a feel for what this is. It's a new levy on industrial goods that are imported into the UK, and if you're the importer, you're hit for accounting for this new tax. The whole purpose for it being introduced, not just in the UK, but wider basis, Europe, etc., is to address carbon leakage and encourage better behaviours and, cleaner production, etc., in the industry space. There is going to be a lot more about this. One of my colleagues, Craig Stobo, is a very enthusiastic CBAM chap. He knows all about the legislation, etc., and all the changes that are coming. And I suspect ICAS as well will be doing more in the future, just about what does this look like and who does it affect, etc. Over to you, Chris.
Thanks very much, Tony. And just on that point, we are hopefully going to organise a webinar with Craig in the autumn just to raise awareness of the CBAM initiative, changes in legislation, because I think it will affect more people than our members might realise. So before we move on to our question and answer session, I just wanted to remind everyone of the role that the ICAS tax team can play to support you when navigating the VAT system, either for your own business or for that of your clients. So we're represented on the Joint VAT Consultative Committee, and feedback from our members is really important in terms of identifying issues to raise with HMRC. We often raise issues with HMRC, so this can be looked at by a specialist team. So if you have anything that you need to raise with us, please let us know. You can get in touch with us at tax@icas.com to let us know your comments and any feedback that you might have. And just before we go on to the Q&A session as well, Tony, you did mention the consultation on the e-invoicing. So my colleague Susan Cattell has recently written an article on the ICAS website. So again, if you have any comments or feedback on that, she would be very pleased to hear from you. So thank you, everyone. We'll now move on to the live Q&A session. Please feel free to add any questions using the Q&A box at the top of the screen. Tony, I've got a few questions just to get us started. Thanks very much for covering quite a range of topics. And you kind of touched on how there can often be some uncertainties in VAT. And what would you suggest if someone has looked at HMRC's guidance or they've done a bit of research and they're still not sure how to deal with something from a VAT point of view? What's your best advice to them if they're in a moment of uncertainty?
No, that's a great question, Chris. What I would suggest in that situation is seeking advice from a VAT specialist. We're independent of, the situation. We can look at it, with a fresh pair of eyes and a knowledge of the VAT rules, and we might be able to give you the comfort and say, look, what you've got is right or what you've got is wrong. Equally, there are situations where it might even be a little bit grey for us. And in that situation, I think it's always a prudent approach to seek HMRC's view. So, for example, you can send in a non-statutory clearance request to HMRC where you're writing down, here's our fact pattern, here's what we think the VAT treatment is, here's what we've done, and here's the guidance and legislation we've looked at, and we're just not convinced that you're covering our situation, because that will be why you're writing to HMRC. If the professional advisor says, oh, it's not really covered, HMRC can then respond and say, well, here's what we think about this. And anecdotally, and in my experience, it can take some time for HMRC to look at these things, but they are definitely improving their service levels and they can give certainty quite quickly. And I'm finding now on here's what the position should look like. So seek help from an advisor, number one. And number two, if it's still a bit unclear, ask HMRC to give their thoughts on it.
Thanks very much, Tony. You mentioned protective assessments. There's one of the tax cases where HMRC had got it wrong, but they'd raised a protective assessment. What's your advice to anyone if they receive an assessment generally, but specifically a protective assessment as to what they should do?
Well, I'm actually seeing less of the protective assessments in recent times since this case, which I'm happy to see because I'm assuming that maybe internally at HMRC, there's maybe been some internal education about here's when you can issue an assessment. Don't just assume you can put any paperwork out the door. Just to be clear, most assessments on balance will be correct, but it is worth checking any assessment to receive just to make sure it is accurate. And that goes beyond arithmetic. An assessment will have, here's how much you're due to pay HMRC. You need to check that. But you also need to make sure that HMRC have the powers to issue the assessment. Have they issued it in the right time or are they out of time? Similarly, and I'm moving on a little bit because I'm moving the goalposts, but it's the same for yourself if you're looking at, oh, I've overpaid VAT or I've underclaimed VAT. Before you punt in your claim to HMRC, just make sure, well, am I in time? Not only is it right that I've got such a claim, but the principle's there, am I in time to get this from HMRC? So there's two parts. One is it's important to check the paperwork. If you think it looks sensible, but I don't really know if it's right or wrong, I don't really know the legislation in and out, speak to a VAT advisor. We typically do know the ins and outs of when HMRC can or can't issue a certain type of assessment or if they should be issuing it at all.
Thanks very much, Tony. And lastly, you might have touched a little bit on digital and making tax digital for VAT. That's been in place now for some time, so things have bedded in a little bit. I mean, have you had any observations, in your experience as to how that's gone generally, from the VAT profession? And is there any lessons that you think can be learned? We've got HMRC joining us for a webinar in a couple of weeks' time on MTD for income tax. Is there any lessons that you think can be learned from the VAT experience that perhaps might be useful when it comes to MTD for income tax?
Yeah, no, I certainly do, Chris. I think one thing I would note is when VAT was a guinea pig, I joke, maybe even to yourself about at the time, we were first for MTD. And I think the lessons I've learned is it's not as scary as maybe it sounds. And, with some education from HMRC, it became a lot more practical about here's what we're really wanting from you. You don't need to invest X thousands or millions of pounds on new systems and processes. Here's what we really want from you. So what I would suggest to people that are now thinking about it from an income tax level, for example, is, take the opportunity to go on the ICAS or HMRC webinars, understand what's really required of you. And then if you need some help checking, well, have we really got sufficient digital links, for example? Have we got that proper digital journey without the manual input that's acceptable to HMRC? If there's uncertainty or you just know it's wrong, speak to a VAT advisor if it's an MTD for VAT, or indeed speak to ICAS people like yourself, Chris, if you just want to get a bit more reassurance or direction on what to do.
Thanks very much, Tony. We've got one last question. It's just snuck in just before the end. The question is, could you please outline the changes or likely impact of the e-invoices that you mentioned?
Yeah, I think, again, it's just a carry on from what we're just discussing for MTD. HMRC are very keen for, much more digital output with very little manual input. So very headline news. It's all about, what can we do to make automation as far as possible without the input that's manual, which is still inherent in a lot of sectors or businesses. On this point, and I think these two combine quite nicely, actually, in the future, we might be closer to countries like Spain, where MTD and some guys has been around for a while, and you have HMRC interrogating, or sorry, the Spanish tax authority interrogating, businesses' invoices, sometimes on a real-time basis, sometimes daily for larger businesses, and it's because they've got that digital footprint in place with the digital e-invoicing a bit better shaped than perhaps what we've got, and MTD's a bit more fine-tuned than what we've got just now. I don't think we're going to see the end of this digital journey. It's going to come in various guises. We're into MTD for VAT. We're seeing soon there's going to be the e-invoicing, and there's going to be more things coming out of this. And broadly speaking, it's probably a good thing for business and HMRC having this stuff.
Thanks very much, Tony. Well, look, we're almost out of time, so thank you again for joining us and for giving such comprehensive coverage of a whole range of issues that our members need to be thinking about when discussing VAT with their clients. Please remember that you can keep up to date with all the latest tax and other professional news, including the latest information, guides and resources on our newly updated website at icast.com. You can access technical support through the ICAST Technical Help Desk, available through the Contact Us section of the website. This covers audit and accounting, tax practice support, AML and ethics. It would be great if you could leave us a rating for today's webinar. There should be a poll just appearing on your screens at the moment. We really appreciate your feedback, so please take a few moments to respond before logging off. Looking ahead, we have a range of events in the practice and tax space in the weeks ahead that you might want to sign up for. On the 25th of March, we have the Making Tax Digital for Income Tax Time to Get Ready webinar. I look forward to hosting Craig Ogilvie, HMRC's MTD Director, and Sam Wood from HMRC's engagement team to talk about the latest developments in MTD for income tax following our previous webinar back in the autumn. This is your chance to hear from the HMRC specialists leading the implementation of MTD for income tax and ask any questions as we reach the final year before the first sole traders and landlords have to comply with the requirement to submit quarterly updates to HMRC. This is followed on the 1st of May with the first of two spring tax update webinars with the general tax update with my colleague Susan Cattell, who will be covering the key developments in personal tax, corporate tax and VAT. This will be followed on the 14th of May by myself and my colleague Justine Riccobney, who will be covering the developments on the employment and owner-managed business tax space. Both spring tax updates will include any announcements in the Chancellor's spring statement on the 26th of March. And on in-person events in June, we have two in-person events from a practice perspective, our practice management course in Edinburgh on the 3rd of June, and our ICAST practice conference Thrive in 2025 in Glasgow on the 11th of June. Links to all these events and others are available on icast.com/events. It only leaves me to thank Tony for his expert VAT advice and you for the audience for joining us today for this webinar. We hope it has been useful to you, and until next time, it's goodbye.